Quick and informative video for you guys today. Bitcoin has surged back above $79,000 for the first time since February 3rd, as we can see. Oil has also gone up back above $93 per barrel after Iran says they have no plans to attend the second round of peace talks with the US on Fridays. Now, let's talk about Bitcoin briefly, because what I think will happen is that we're going to go up before then eventually going down. And yes, I do for a first time think we're going to go up actually. Usually I always say we go down. So here quickly the outline for Bitcoin. I mentioned this a few times for the new viewers. This is usually we go down for a year, 364 days we go down from the top to the bottom. As you can see, we've done this 2 cycles ago, we did this last cycle, and we will do this most likely this cycle. That's why I think long term, or over the next few months at least, we will go down. And then usually we go up for 1,064 days from the bottom to the top. So just so you can see the big picture. And it's always good to see the big picture in these things, in my opinion. So what do I think will happen to Bitcoin? Well, first of all, I think we're going to go up a bit, because we have something called a CME gap. And these are the gaps that are formed over the weekend. We can see they are always on these gaps between Sunday, Friday, and of course Monday. So we take the closing price on Friday, and then we take the opening price on Monday. And the difference in that price is the CME gap, which 95% of the time, don't quote me on the percentage, but most of the time it does get filled. So for example, I want to show you, we can see here's the gap, right? The top of the range is at around $84,000. And this is what I think we're going to reach. We're already almost halfway there. We're like almost at $80,000. And just to show you guys that these gaps get filled, for example, if we look at last cycle, let me just reload this briefly. We had last weekend and the weekend before, we had 2 CME gaps. For example, here, have a look at this. We had a gap. Let me draw it for you guys. You can see this gap, and it was obviously, it was filled right here. And then we had a gap here, and it was also filled right here. And also keep in mind, we have 2 more gaps on the downside. One is all the way down here at 70,000, and one is down here at 67,000. So I think first we're gonna fill the top side, so 84,000, and then we go down and follow this trajectory here. So looking at Bitcoin, and just to confirm this looks at Bitcoin on a daily chart. We can see that from the top, which is 126,000 in October, we always retested the highs. The previous highs was here. We retested it and went down. We did it again. We had this symmetrical triangle, bear flag pattern, and then we kind of, consolidated to the end. And then usually, just for the new guys, we know that if we have a pattern like this, we usually consolidate, our volatility gets less and less until at the very end we have a breakout zone. We either go up or we go down. So in this case we went down, and right now again we retested the high, so most likely we are going down here. Looking at Bitcoin here, so if I look at it on the weekly, we can see that we have strong correlation with this weekly support and resistance band. Have a look at this, the white line. We have had it as previous resistance once, twice, 3 times, and also it has acted as previous support. And if we zoom in here, we can see that right now we're exactly at this level. So yes, we might go a bit higher. It's just a trend line, and the trend line, we usually draw it to try and have the most points of contact. So we try to, the trend line, you can draw it in the way that it touches the most points, and that's the most accurate way to draw it usually. And right now we at resistance. I think we might go a bit higher because of the CME gap that I mentioned at $84,000, but then eventually go down. Now, one more thing to note, I think, to show you guys, is we can look at the EMA ribbons, and they just tell us if we're in a bull market or a bear market. And whenever they flip, so you can see they flip here, you can see the yellow line is at the top, and then eventually it flips down. And the yellow line is like a short-term simple moving average, while the red line is more of a long-term moving average. And we can see that the lines flip. It's a lagging indicator, so we obviously entered the bear market right here because we started going down here, but the EMA ribbons only flipped a bit later right here. So it's a lagging indicator, and I don't think this is the end of the bear market, of course. Look, we just started going down. They just flipped here. So most likely we're gonna stay below, get rejected. And look at this, last time we went into a bear market, we had the top of the bear market right here, but the indicator only indicated the bear market here. And we didn't go up immediately after. We stayed down for quite a few months before eventually flipping it again here. But you see it's a lagging indicator. At the bottom was right here, while we flipped it a bit later. So same thing right here. We're most likely gonna stay below and then eventually find a bottom, and then the EMA ribbons will flip a bit later, like I have mentioned. Another thing I can note, last thing for today's video, is the bull and bear market support bands. These also just tell us if we're in a bull or a bear market. If we are below them, we're in a bear market. If we're above them, we're in a bull market. Right now, we are retesting them. You can see here, we did not go above, and here right now we are looking like we are going above, but most likely what will happen is we get rejected. What I'm trying to say is that we are at crucial resistance. Resistance because of the strong divide line, which is the multi-cycle support and resistance, and also the EMA ribbons, which you can see last cycle when we went down. This is the bear market of the last cycle 4 years ago. We tried to go above, but we did not manage to, and then we stayed below until eventually we managed to go above. And this indicator is a bit better than the EMA ribbons, because let me actually put the EMA ribbons on top if possible. Okay, it's not possible to put two. I need to get the, if you guys watch my videos more, I get the paid version of TradingView, and then we can have two indicators. So you can see it actually, we go above a bit earlier, so it's not as much lagging as the, I can draw this actually, we don't need to pay for TradingView. Look, what we can do here is just draw it. So you can see that it flips right here, but if you compare the EMA ribbons, they flip a bit later. So you can see they actually flip right here. So now let me remove the EMA ribbons. This is the EMA, and this line is the, what they say, bull and bear market support bands, which is a better indicator in my opinion, because we flip it earlier, so it's not as much lagging. And we can see right now that the bull and bear market, we are still below. So that's all for today. Hope you guys enjoyed it. So don't get trapped. Don't start longing now. If anything, in my opinion, you could sell a bit at 84,000, because that's most likely where we're going, and then buy along the way. Wait until we go down below these levels, below, like, you know, below 62,000, and then start buying heavily. See you guys. Bye.